Today we have with us Professor Rajesh Kothari. Dr. Rajesh Kothari is advisor in research and innovation, Taxila Business School. He is former president of ICFI University, former dean and director of R.A. Podar Institute of Management, University of Rajasthan. Professor has 40 years of teaching, training and mentoring experience. He has guided more than 35 PhD scholars till date and also has 6 books, more than 50 publications to his credit. Dr. Rajesh Kothari, sir, I welcome you.
Thank you, Dr. Jain. Happy to be back with my students. And the topic is finance for non-finance. At the outset, this topic demands a fire within you. If you wish to be millionaire, and if a millionaire want to be billionaire, you are welcome to this seminar on finance for non-finance. What are you talking about today? I'm just trying to kindle the fire within you to make good money, decent money, legal money in the life. And probably nowadays, said unsaid, willingly or unwillingly, the success has only one parameter, that is the value that we create, wealth we generate, and of course, prosperity that we share. But have you ever thought what is the common link in all three words that are spoken? That is, value that we create, wealth we generate, and prosperity that we share. And the common word is nothing but finance. You may be good at those areas which may not sound so good about finance, but then finance is unfortunately or fortunately the nerves of all ecosystem. Recently, you have gone through the budget, and there happens a lot of hue and cry about budget. People have cried about provisions are favoring, they are not favoring one. So this kind of things happens to be there. Today I'm just going to touch upon the dimension of finance that you should understand, you must learn about it in case you want to be truly successful. Success at this point of time to be measured only the wealth that you have been able to generate over a period of time through all legal fair means. Right. So first point that comes to my mind is what is finance? And when I use this word finance, it simply means is more about money management. If I say what is finance, then I'll say the provision of money as when required is said to be finance. Now, what is money? You are all worried about money, but what is money all about? And when I look at the term money, it comes out to be money means anything that's capable of performing the function of money. So if you want to understand money, you must understand the functions that it performs. And the function may be store value, maybe purchasing power, maybe something that is the measurement function. Because if I say that I have engaged one engineer and one chartered accountant, makes no sense to me till I come to know what is cost that we are going to incur. So money is what money does. And what money does? Measurement, assessment and valuation. It is representative in character. It represents value. It is not the value itself. For example, you look at your currency note, an example of money. Clear? Now the currency note per se carries no value. It represents value. So when I use the word finance, I'm just talking about provision of money as and when required is said to be finance. Provisions means purpose. And said unsaid, we have 4 defined purpose. 1, for the purpose of liquidity, you must carry always some money in so that you cannot face any adverse situation. So liquidity is there, then solvency is there, then profit is there, then of course investment and speculation is there. Clear? Now, as and when, the concept of when is the concept of time. You may need money immediately, you may need in near future, distant future, or in the long run. In our language, what we call, we require money for the short term, we require money for the medium term, and we require money for the long term. Clear? From our perspective, when I use the word term, I am not confining it to the number of months or year as the case may be. The factor that we have to understand and appreciate is that is what we say, as long as either supply or demand of money is inelastic, flexible, fixed, is said to be short run. Short run means expressing some abnormal rate of interest, or you can say exchange at which goods and services may take place. Long run means where both factors, demand and supply, turns out to be variable. So you experience volatile rate of interest in the market. One. My dear student and my dear children and my dear participants, when I use the word finance for non-finance, what are we aiming at? Appreciate the dimension of finance. The more often you come across, when I use the word finance, we refer it to corporate finance. That is, finance functions being performed in the company called corporate, company called public limited or private limited, or a partnership firm or proprietary concern. So here finance from perspective of business enterprise, be it national, multinational, international, limited, unlimited, privately limited, or you can say LLP, or all kind of organization. There the role of finance is well defined. It starts from what I can say, procuring your assets, right? Creating liabilities and procuring assets. Clear? I'm not going into details about understanding the balance sheet, which is one of the expression of understanding finance. But currently, yes, we talk about corporate finance. In corporate finance, our dimension is going to be, for example, say planning for capital expenditures called capital budgeting one. Now, no capital resource is free from cost. So we talk about the cost of capital as well. Then we talk about the different choices of sources. So we talk about leverage. So we talk about in corporate finance, we talk about capital structure, we talk about capital budgeting, we talk about cost of capital. These are the dimensions one. I shall be happy to be intervened by my dear participants. Any term, any word that's not clear, you can intervene and we can refer it to your questions and queries accordingly. All right. So one side we talk about the corporate finance, starting with the cost of capital, capital structure, capital budgeting, leverage. They may sound very high to you, but then you don't have to worry about it, because we at Taxila believe in creating the foundation, then application, and then of course you're ready to enter the market one. All right. Our choices are what in terms of corporate finance? One dimension is resource mobilization, and therefore we talk about the dimensions of capital expenditures, we talk about dimensions of cost, and then we talk about dimensions of the structure of capital. When I use the word structure of capital, most of you at this point of time are equally aware of the boom in capital market, per se boom in stock market or share market one. What is this boom? Boom means when companies are trying to raise resources from public like you and me through IPO or through FPO, is said to be resource mobilizations on the part of the company. So in our curriculum, we discuss how a company can raise money from the market. What is an IPO, for example? What is the valuation of an IPO? Why some of the IPO give return more than the issue price, and why they fail to do so. So one side, in corporate finance, there are the resource mobilizations. And primarily, when you look at resource mobilization, you talk about a choice between the equity capital and the debentures or the debt or the long-term resources one. Now, when you talk about the equity resources, the common referred word is said to be equity shares. All right. And when you talk about the long-term resources, the resources that you have to pay within the life of the organization, primarily we refer it to debenture, debt capital, or term loan. Now, when you look at the market orientation, it is equity share capital, it is the debentures. But when you look at the closed door, then it turns out to be term loan, or maybe money realized from non-sources one. So resource mobilization would mean a long-term resources, which you define as debentures as well as the capital one. And by the way, what is capital? Let me just have a few seconds on it. Capital means any resource which is foundational in nature, resources which are there in the organization for almost lifelong. And the best part of such resources are they are never repaid. I repeat, they are never repaid in the life of the organizations. Unless there is a capital, there cannot be any other resources, any other long-term resources in the organization one. On the other hand, when you look at the debt capital or debentures or the term loan, we talk about debentures which are convertible, debentures which are partly convertible, and debentures which are non-convertible one. So this is one aspect. The other aspect of resource mobilizations could be, we can say, for the short run, and therein you talk about creation of current liabilities one. Well, this is not right time to explain in details the meaning of long-term liabilities or the meaning of current liabilities. But then, yes, a non-finance graduate must understand this is what is essentially required to study, to understand if you want to know more about any corporate functioning in the country or elsewhere. Now, once you mobilize resources, such resources have to be deployed gainfully for generation of return. So, what we talk about? We talk about how do we create assets. Primarily, the creation of assets is because primarily the creation of assets is primarily the creation of assets is what we can say deployment of your resources. If resources is a liability, assets creation is application of those resources one. So what we talk about assets that we create, and there we talk about the fixed assets, there we talk about current assets one. When I say the fixed assets, of course you talk about how can you procure machinery, plant, equipment, how can you procure the other fixed assets, and how can we have assets which arise out of the operation. That includes the current assets one. So my dear participants, understand when you talk about procuring the current asset, procuring fixed assets means it is creation of long-term fixed assets, and that it involves, rightly said, capital expenditure decision, or the one who's got a background is known as capital budgeting decision, right? So first part that we talk about is very briefly is corporate finance, and in the corporate finance, what we say the resource mobilization on the part of an organization as well as how such resources are deployed, where these are being you can say the applied, and we have to match. In fact, when we mobilize resources, we have to incur the cost. For example, if I go for long-term debt, I have to pay interest regularly. The payment of interest is mandatory and compulsory, whether we are profitable or we are not profitable. Those who make investment through equity, yes, for them, dividend is the word that you must be familiar with. Dividend means sharing the profit in proportion of the capital that you have contributed to the organization one. So one side there is a cost, but logic says if there is a cost, there has to be return as well. So we generate return out of deployment of capital resources in the organization, and that deployment is coming through when we procure fixed and long-term assets called plant, machinery, building, etc. And by use of those plant and machinery, we try to generate product or productions, and the productions are being sold, and of course there is a markup, and finally we sustain profit. Out of the profit, we try to meet the cost of capital. This is the equation that you have to understand. One side we incur the cost, on the other side by deployment of resources we try to generate profit. Clear? So first part for any non-finance one is, if you look at from the point of corporate, then this is the first part. But then not all of us may be interested in what I can say the corporate finance. So remember, one dimension of finance is said to be accounting function, other dimension is said to be your finance function. In the entire gambit of the word finance. One we say accountings, other we say the finance one. In the accounting function, we just talk about, I'm sure most of you must be making the statement of expenditure that you do on a monthly basis, daily basis, yearly basis, maybe at your individual level also. From that perspective, finance for non-finance talk about how you're going to keep systematic record of a transaction. You may not be required to make journal entries as a company may do, as business enterprise may do. All you do is write on a piece of paper the one side the money that you receive from your parents if you happen to be students, and on the other side you just try to write down expenditure on ABC kind of items, and at the end of the day you discover whether you are left with surplus or you're left with deficit one. Alright. Now the deficit has to be compensated nothing but the generosity of your parents only. Clear? Now, what is valid, I repeat, what is valid for an individual is equally valid for the organization one. So, finance for non-finance, for those who are non-corporate entity like you and like me. Clear? It start with one side. We have the income. If you are a business person, your income may be from your business. But if you are a salary class person, your income or inflow is on account of salary that we get it at the end of every month. I understand, and you also agree with that because of COVID, there happens to be not very sharp rise in salary income in most of the cases. However, things are returning to normalcy. Hopefully, we'll go back to the pre-COVID level, even more than that. Anyway, come on. So if I start finance for non-finance for you as an individual, I'm just talking about three things. Number one, how do you keep the record of financial transaction? And what is a financial transaction? Any activity that expressed in terms of money is said to be financial transactions only. Clear? If I say I bought 1 kg, this makes no sense to me. But if I say I bought this product for this price, will make sense to me. Clear? Because remember, finance is the most common language to measure all our activities. We buy, we sell, we consume, we enjoy, but then everything has a cost. You don't have enjoyment without incurring the cost. Clear? And whatever we are engaged into, it has some monetary aspect also. Sometimes subconsciously, the subconsciously this monetary value has to be understood. All right. So for a personal one, it may be recording of a transaction. When you wish to classify on what account you have done, how much time you have traveled Zomato or Swiggy to meet your one, you also make it up the expenditure on food item, for example. All right. Then how many times you have ordered through Flipkart and the Mantra and all these things one. So all this what you do, something consumable, something durable, and at the end of the day or the month or the year, when you sit down to work it out, what have you earned, what have you spent, what is the balance left over. Clear? For you to understand finance is essentially to understand A, how can you are going to meet your daily expenditures, how going to you save for future, how much you're going to save for your rainy days, and what is what I can say, the opportunities which may come to you at any point of time. All right. So these are the dimensions one that you have to understand and appreciate, because right now you may talk about the crypto, for example, whether legal illegal that we'll discuss later on. But yes, you like to make investment in crypto because it gives you high value return. Of course, there is a risk also. So for personal understanding of your financial income, expenditures, then as we move on, we look at there is a wide term called personal finance. What is a personal finance? It is nothing but managing your investment portfolio. Managing your investment. For an individual, I am an individual, alright. So my personal finance will include, beside tax planning on the income that I sustain, my personal finance will include what? How I'm going to create FD with bank. Now, which bank should I go for FD? Clear? What are the rate of interest that I'm going to make it on FD that if I go with bank X or Y or Z? And more important rate of interest is the safety. If you heard, the government of India has said that FD more than 2.5 lakh will not be guaranteed, is not guaranteed for its safety on liquidity or on its maturity. Anyway, so I do look at creation of fixed deposit, small savings called IVP or Kisan Vikas Patra, or you can say the small saving that we go for it. Then you look at how can I create and what balance should I keep into my SB account so that I can meet out this one. There is SB, there is RD, there is, for example, fixed deposit. But trust me, today bank is just not for FD or you can say SB. Bank are much more things. They may include about creation of mutual fund, creation of insurance. So probably you all agree with me. In the realm of personal finance, we talk about investment. We talk about creation of what I can say the long-term investment through mutual funds, through capital market. Then we talk about the investment in bullion called gold. In fact, and the latest word that you may come across, and that you may come across, the latest word is the fungible assets, right? And the fungible assets, these fungible assets means what I can say when you express your interest in some art objects, beautiful paintings, all right, which may not have some exclusive money value, but yes, it's said to be fungible assets. And probably the recent budget says something more about this one. More in details, we'll talk about this one only. Clear? Now, so in personal finance, we talk about creation of our wealth. We meet our expenditures in case if FD is there, I need money. Should I liquidate my FD or should I overdraw on my FD? Called overdraft facility available with banks. Personal finance is better of choice, and that three things are there. A, what risk you are willing to interact. B, return, that is what do you expect, and then of course the time framework. Clear? We are in a market which is a fluid state, which is very volatile market. So nothing is fixed. So you have to drive your vehicle of finance very carefully so that if at all you are exposed to risk, the impact should not be too severe or impact should not be too dangerous so far your financial wealth is concerned. All right. Then you may talk about, for example, in personal finance, we talk about your housing finance as well. That is, you as an individual intend to have a dream to have your own home, right? So you go for personal finance, wherein you take the home loan. You talk about the rate at which I should borrow the loan vis-a-vis the value of the property, the duration in which I'll able to repay my home loan, and then I'll become owner of that property. One. Clear? So then you plan for the, I repeat, you plan for the education of your children, or you plan for education of yourself, only higher education, for example. Then you go for some long term, I repeat, some long term mutual fund space for a specific purpose only. What I wish to say is, yes, my dear participants, currently the area of finance is so exciting, so challenging. It has full basket of products, services, activities that may entice you. Probably you'll agree with me. For last precisely 4-5 years, we all have become digital. All right. I think it would have been months for me to have gone to my bank branch, and that would be true for most of you. You don't go to the bank branch anymore, right? Everything is available on a tip, right? It's a digital, it's a net banking, all right. It's a virtual banking, clear, and you're all aware of it, the importance of this. So another area for finance or non-finance that we need to explore is called fintech, that is financial technology. Clear? Company like Paytm, company like PhonePe, company like BharatPe are an example of fintech. What is fintech? The blend of finance and technology put together is fintech. What is a fintech? Bridging the gap between the saver and investor. All right. If I have to go for insurance policy, gone the days I'll have to wait for, I repeat, I have to wait for the insurance agent to come to my place, fill in the form, he'll demand the lot of what I can say, the formalities to be done. And today what we do, at a tip, we have our KYC done, clear? And within seconds, our policy is in our hands only. So speed has increased, accuracy has increased, but then risk has also increased. You have to be careful about the financial fraud, because right now this is the easy money making for those who are truly culprits. One, how can we be safe about it? What is the financial security? What is the financial safety? That we may talk about some other day. But current version is, yes, we are talking about finance for non-finance one. First, we started with, I repeat, the corporate finance. Then we talk about personal finance, And in the personal finance, we are concerned about falling income, rising expenditure. Every household, if your father happens to be a salary class, worried about mismatch between income and expenditure. One, he has to ensure your bright future. Therefore, he has to go for investment, maybe mutual fund, maybe insurance policy, maybe shares, maybe gold and bullion, etc. And at the same time, he has to meet his daily expenditures. He has to keep money for safety, and most of you must be having something called medical policy. But that is medical insurance one. Clear? If you have started your career, I'll simply advise go for those products which are going to protect the future. Of course, future is unseen, but yes, a step towards can be taken up. If you wish, we can discuss at length what is the realm of personal finance one. Clear? Now, when I look at this chat box, I think yes, we come across some is the emergency fund in personal finance. This is, I think, if I read correctly, this is emergency fund in personal finance. All right. I think Sumit can correct it. Or if it is funge, then I'll take it to the fungibility assets, which I mentioned to you in terms of art and objects one. Right. So, how can we analyze finance of any company? Sibram, good morning. It is very interesting one to understand and to read between the lines of any financial aspect of a company. All right. First, you should have a good exposure to costing. What is costing? That is cost statement analysis. What is variable cost? What is fixed cost? How cost is allocated? How cost is apportioned? And then you go about it. There are some standard tools. The most often you would have come across ratio analysis is one tool through which we try to judge financial performance. One. Second tool is going to be, of course, cash flow statement. Clear. Then for the operating part, we can talk about in terms of variance analysis, profitability analysis, and these analyses are carried out with the other three things. Fund flow analysis could be there. Now it's obsolete one. Cash flow and ratio are two. And of course, the detailed cost analysis per product, per market. For example, you deal with a multi-product company. All right. Now, the gross sale is the value of all the product at all the locations put together. But we understand that all products at all locations may not be sold in the same quantity, same dimension, same value. Clear? So you have to carry out analysis that's called product revenue generation analysis of maybe location wise, maybe product wise, maybe geographical one, and then you decide what makes you have to do. Uh, Two things are here. Let me clarify. The Finance Act at the start of an activity, and it also comes at end of the activity as such. All right. No sales is possible unless there is a production or outsource. No production is possible unless there are the group of machines responsible for carrying out the productions, and no machinery or equipment are possible unless there is purchase or lease of those machines as such. All right. So briefly, I'll say yes, we can analyze the finance. Well, now, how can we analyze? I said it can be ratio analysis, it can be cash flow analysis, it can be variance analysis, it can be detailed cost analysis. These are the financial numbers. But more importantly, there are other analysis also. And that analysis says compliance report. That is what the auditor says. You have seen the classic example of Satyam computers long back, and it's only financial auditors they discovered that there is something wrong. All right. There's some mismatch. Recently, you're talking about the NAC scam, which is in which the former MD is being questioned by the inquiry agencies, or as the case may be. Yes. You have talked about, sir. Please tell me something about bank fraud happening in India. Well, probably this is not the recent phenomena. The banks happens to be easy targets. Sometime the fraudsters happens to be smarter than the bank employees, and sometimes with the connivance of the bank employees it takes place. All right. The recent example is of ABG shipyard, and the extent of those fraud is to the extent of almost 29,000 crore. Clear? Now, without connivance is not possible. What is that? The first thing to go for bank fraud by a corporate starts with over invoicing of plant and machinery. Clear? Then the same plant and machinery is pledged at 3, 4, 5 different places. One, and those happen to be in exports. They show the fake exports with the value, with the undervalue, and those values never come to country. It is gone somewhere outside of the country. In case you want more in details about the few classic example bank fraud, we'll go in details. See, the purpose of this class is very simple. This session is very simple. Let me just give an exposure to different dimensions of world called finance. One, all right. In case you need more, please log into us. We'll surely get back to you. All right. Yes. Sumit, you have asked one very fine questions, and that question said, "What is the role of behavioral finance?" All right. Remember, this is indeed an upcoming area which is going to have the blend of behavior of an individual and of course financial assets on the other one. Let's take two examples. Suppose today the stock market is slightly low, right? Now this is a statement given to you. Some of you may like to buy at this given level and some of you would like to sell at this level, right? So this behavioral finance is a systematic study to understand what make you to be going for a particular decision, whether you intend to buy or you intend to sell. That means what are those psychological inputs that you carry, what background you carry, and what risk you can take is nothing but the area that we explore, we study, we analyze in behavioral finance only. Nowadays, companies are investing a lot of amount to study the behavior of given set of investors. All right. There may be two versions. Version number one, we have provided the best in class after sales service to our investor, but they have not come back to us. All right. So this behavioral finance denies that is only the return which will drive investor to my authorization. No, more than return is the behavior, the intersection, the psychological push, the approach with which you are handled with. And that's the only reason we few years back we had no choice except having banking with public sector. All right. And the treatment in public sector by and large is known to us, right? Then we have seen the emergence of private sector banks and the treatment is also known to you. So we discover that it's not the interest alone that is going to decide the movement of saving from one bank to other bank. More important is going to be other factors, and but more important factor is, yes, what is behavior to be given to me by the person on the counter side. My dear participant, you would have also noticed, for example, a few years back when you go to any bank branch, this bank branch would turn out to very shabby. They used to have a kind of, you can say, the cage, and then there is a cashier sitting. Probably you can only have the eye contacts, but then he's having a deep one. And today the bank branch is nothing but a boutique bank, as good as any boutique, where they display all the products, and you find one relationship manager is attending your requirement at any point of time. Am I clear? This change is there. This change is there to meet the expectations of you can say consumers. And therefore, what we argue, this behavioral finance touches three dimensions. Financial products, no. It touches with how do you deal emotionally, psychologically with your investors. So that the biggest task with any service provider, any financial service provider, is not only the acquisition of new customer, but more important is how we are going to retain existing investors. And when a product becomes mature, so on maturity, whether he goes for liquidation or because of your nice handling, he goes for reinvestment of those amount in your same organization's one. Why you told about what did you told about liquidity of more than 2.5 deposit FD? All right. Yeah. In fact, if you remember, there is deposit insurance corporation available. Clear? Now this deposit insurance corporation simply suggests in case a bank goes into liquidation. All right. So what is the amount that you will be paid by this deposit insurance corporation against your FD, right? So current limit is 5 lakh rupees. Let me explain. For example, you have got multiple FDs in the bank. All right. Now, the value of all FD is more than 5 lakhs per bank, right? In case something goes wrong with that bank and bank goes into liquidation, under Deposit Insurance Corporation, you will be paid only 5 lakh rupees, let your FD maybe 10 lakhs or 20 lakhs, or as the case may be. So one word that we come across is, in case you want to protect your FD amount, you may go for more than one banks at the same time, because in any bank, the FD amount of more than 5 lakh is not guaranteed under Deposit Insurance Corporation's plan. This is what Saksha, I just simply wanted to say this to you only. Clear? Now, sir, how can we increase our ROI? Simran, please try to be a bit elaborate. What is your ROI? ROI on the investment, ROI you as a student, ROI on the asset that you procure. Unless you make it things clear, we will not able to answer it. After all, a vague answer is not a good answer. So to have precise answer, you have to clarify. Oh, ROI on assets. Fair enough. When I say ROI on fixed assets, that is return on investment on assets. And here when I use the word assets, my reference shall only be on fixed assets. So we can say return on fixed assets. All right. Now, first, how we calculate, I repeat, first, how we calculate return on assets, and then we'll address how can we increase return on assets one. All right. Now, when I say how we calculate return on assets, the simple example, we are not going to go in details because this is not warranted by this awareness seminar. Return on assets is calculated by profit after tax but before depreciation upon gross fixed assets, right? Look at this side. There is concept of ROI, return on investment. The one arm of this ROI is based on your turnover called margin ratio. Clear? And that margin talks about the gross margin, the net margin, the profit margin, where one variable is going to be the profit and second variable is going to be a turnover. It can be sales, all right? It can be net profit, it can be gross profit, it can be operating profit. No. But since you refer it to the assets, return on assets, yes, is going to be the profit that an organization sustains divided by assets that it has deployed. Clear? Again, a caution has to be observed. Profit after tax before depreciation has to be made as a profit divided by the asset. You get a numeric value is said to be 10%, 12%, 30%, the case may be. So first part is calculation and second part is, yes, you rightly asked, how can we increase ROI? Yes. So increase in ROI is nothing but it has two dimensions. Number one, the group of assets that you have procured and put to the productive use. For example, building is an asset, all right, and you have huge building, that building won't give you any productive return over the years, all right. So group of the assets which you have engaged, which you have pressed into your service for creating out your activity or for that matter creating out the products or the goods on the basis of that. That means the efficient combination of plant machinery with support assets. When I use the word ancillary and support assets, I'm talking about assets like furniture, for example, which facilitate efficient operation, which facilitate good working condition are said to be the support operations one. All right. Now, issue is, I repeat, issue is how can you increase ROI? I repeat, the first point is going to be the efficient use of assets utilization one. Are you utilizing your assets with 100% of capacity or less than or more than that? All right. 100% capacity would simply mean, because remember, if you are conversant with finance, then there is a concept of break-even point. All right. Point at which neither we earn nor do we lose. All right. So more than break-even, if you operate, we sustain profit. That means more capacity utilization will make us to have low break-even point, other things remaining same. So increase your ROI is precisely use of efficient assets. The technology, if you have choice to work with, for example, window-based operations, and if you have choice to operate on word-based one, what will you prefer? What will you prefer? All right. Narendra Bhati is going to ask how loss is an asset. Could you elaborate? Yes. Fair enough. Narendra ji, when I use the word loss is an asset, it's simply meaning that if you have comfortable conversant with the balance sheet structure, in the liability sides, there are the liabilities including capital and of course profit. Profit is a liability because that organization sustain on the deployment of capital. Now on the asset sides, we show loss. But caution is, having shown loss in the asset side is not the assets, because loss doesn't fulfill any of properties to be called an asset. Loss simply is shown in the asset sides to have what I can say, the matching factor called assets are equal to liabilities and liabilities are equal to assets. So to be precise, if I say losses are an asset, so it's not. However, it is shown in the asset side just to have accounting equation messed up one. All right, we are moving on. So in moving on, we have seen the concept of personal finance. We talk about the corporate finance, and now we talk about personal taxation one, which is very crucial part. I think most of you worried about, in case you start earning, you're worried about the personal taxation one. In fact, we don't have millions and billions taxpayer in the country. I think the taxpayer doesn't exceed more than 4 or 5 crore as the case may be. We are honest taxpayers. All salary class person happens to be honest taxpayer. So they don't find an opportunity to hide their income. In fact, there is a concept of TDS, that is tax deducted at source. So what salary you get it is deducted at spot on the spot itself. So there are certain advantage, certain rebate that you can claim under section 80C up to 1 lakh rupees. Then there are others like 80G, 80D. More you have to look into this one only. In fact, the personal finance also talk about how can you have good tax planning. You buy shares, you make profit, you pay tax. All right. But if you buy shares, you sustain loss, thus loss can be offset against the profit that you made it. So very interesting one. Details if you get a requisition accordingly. Right. So finance for non-finance, starting with, I repeat, personal finance, a brief idea about corporate finance. Right. The one point which I like to highlight to you is that the cost factor. Clear. Cost is the crucial aspect of any and every financial decision that we make or we don't make. So there are two terms, one expenses and second is the cost. Cost is unexpired expenditure, and expenditure is one. Once it takes place, it is exhausted. Its utility is over. Clear? From organization point of view, even from personal point of view, when I use the word cost, I'm referring it to, I repeat, you would have come across direct cost, indirect cost, variable cost, semi-variable cost, or fixed cost. Clear? When you start a business or enterprise, you have to worry about cost. Right. So fixed cost means you operate or you don't operate. That minimum you have to spend irrespective of zero activity or 100% activity. Fixed means it is not fixed forever. It is fixed for the given time framework or given level of activity. Clear? For example, chamber from where I'm going to address, there is a running cost of electricity, for example. All right, or the equipment that we have. Now, if there are only 10 participants, the cost will be for the 10 participant one. But if the participant increases to 100, the cost will be distributed over 100 participants as such. All right. Then there is variable cost, which vary with the level of change in activity or with change in output one. Clear? So semi-variable cost, semi-fixed cost mean a portion of cost which vary, other portion of cost which doesn't vary is said to be semi-variable cost. In fact, my dear participants, remember, once you get no support from the market, in any competitive market that we are in, clear, we cannot pass on rise in the cost to the consumers. So the best word that we understand, appreciate is rupee saved is rupee earned. All right. So we try to devise those mechanisms. Through which we try to save the cost within the organization's one. A classic example is when there was not competitive situation in the economy. I'm talking about pre-LPG time. Now, if you happen to be multi-product company, multi-doing company, now from same division, from the same office space, if 3-4 divisions are working, every one of them will be sending their individual packet or courier to the head office or to the office that be. And now, because rupee saved is rupee earned, instead of multiple packets of courier, one packet goes. And forget about. Now there is no concept of sending the letters etc. unless critical required one. The email is there. And furthermore, you switch to the WhatsApp. All right. So what we should suggest you is that increase in cost disturb your revenue, disturb your profits. So you should have the healthy profits, and therefore companies are preoccupied. I repeat, preoccupied with the concept of rupee saved is rupee earned. That is the buzz line when you look at any cost management. Interestingly, the finance for non-finance should be understood from the broad macro indicator, and that's said to be ESG, environmental, social, and governance. That is, that is a as part of finance for non-finance, you must understand the cost of heating, touching, promoting the environment. All right. If you are from Delhi, you must understand Deepavali, around Deepavali, Delhi turns out to be nothing but the gas chamber because of high degree of pollution. So we are promoting this. What I can say, the clean energy, the green energy is all in the realm of finance. Nothing is free. All right. Recently you heard about we are moving towards electric vehicles. We said pollution. The cost of operation running vehicle is bare minimum one because it is through electric vehicles is there. So when you talk about finance for non-finance, you have to have the curiosity to learn, because I repeat, there is more than meet the eyes in terms of numbers, figures. All right. Profit of 10 crore makes no sense to me unless you know it. How did you arrive at this one? So it involves A, descriptions, B, analysis, and C, make conclusions and take decisions. Why? The report generation in finance is not enough. Important is submit the analysis, find out decision making parameters, and we talk about. Is there any question at this point of time? Would like to ask something more? All right. We move on other dimension of finance, which is said to be international finance, or you can say forex one. Clear? Currently, we have the global trade with us. All right. Beside goods, important is currency price or exchange rate at which things are going to take place. And remember, if I say the $1 is equivalent to, as of now, say 80 rupees or 90 rupees, means what? And if I say the $1 is equivalent to 100 rupees, for example, what it means, you must understand. More unit of currency suggest our currency is weak, but is good for export, bad for import. Clear? So in international finance, we talk about three things. Number one, exchange rate. Number two, risk attached with fluctuation in the currency value. And third, how do we minimize the risk by virtue of spot or forward trading? Then the another dimension that you should understand, you must appreciate, is nothing but your microfinance. It's called microfinance, or you can say the MFI, microfinance institutions. This microfinance is really interesting area of operations wherein you make people truly economically empowered. It may have the exposure to the self-help group, it may have financing to small requirement, and that microfinance operates on promoting entrepreneurship at small and individual level one. Clear? So this microfinance is good area where you can look upon. Now, some of you is going to ask the career in finance that we have with us. All right, let me touch. Having seen the broader spectrum of finance for non-finance, the career in finance have a, you can be a corporate finance executive dealing with, I repeat, dealing with resource mobilization, application resources, and finding out ROI on assets. All right. The second area where you can have the exciting career is nothing but financial planner. See, right now, in our time, we didn't have enough of mutual fund. And right now, there are no dearth of mutual fund, for example. All right. Now, if I take the help of personal finance expert, he is going to leverage out risk and return for me. So that area of personal finance and that area of, you can say, the personal finance experts are indeed growing, and you'll be happy to learn there are the HNI. They do keep expert to manage their portfolio. They don't make good money from portfolio. They make good money from their operation of business or industry, as the case may be, and money that they earn can be invested into creating the financial portfolio. So one area could be this corporate finance expert. Second area could be your this I can say the personal finance one. The third area, which is very emerging for all of us, is going to be equity research analysis one. Clear? Rightly said, he who can read between the line in finance is financial wizard. So how can you read the equity? How can you carry out equity analysis of should I go for Reliance or should I go for Bajaj Finance? It's not my task. It's a task done by the equity research analysis to one. They are there, I repeat, they are there to predict and project the future price of shares. But it calls a great amount of understanding, fundamental, technical analysis one. It is not an easy task where you say, okay, buy this or sell this. No, it has to have the long and in-depth research, maybe fundamental research, maybe technical analysis, the case may be. My dear participants, the another area which is very high in demand and very short in supply is actuarial finance actuarial one. What are the actuaries? Actuaries are those which are engaged by insurance company, which are engaged by the mutual funds, for example. If I design an insurance product in terms of cost benefit, in terms of risk and return, it is the actuaries only who are going to design the financial aspect of an insurance policy, or you can say the financial aspect of any mutual fund long term. For example, you come across there is guaranteed income. All right. Now, who is going to decide what shall be the guaranteed income after 5 years, after 10 years? This is the task of actuaries. And I think this is the tough, but then yes, it is very rewarding careers. In India, there is acute shortage of actuarials because it is very difficult to get through. But once you are through this actual science one, then there is no looking back. All right. The other area which is said to be risk management one. And the popular course available in the market is Financial Risk Management, FRM course. Again, much in demand. You talk about risk. In fact, when I use the word risk, I'm talking about uncertainties, right? So you need to manage your empire, enterprise, profession in case of uncertainties called risk. Primarily, if I say the risk, it is of two types. The risk that's known to us and the risk which is not known to us, systematic or unsystematic one. Risk that can be passed on and the risk that cannot be passed on. All right. More in details we talk about. Then the risk can be purchasing power risk, can be technology risk, can be currency risk, and other risks are there in the one. So FRA is another area. Then the dimension is going to be of certified financial analysis one. It is more than the risk. It also includes your investment and portfolio creations one, high in demand. Clear? Then other dimensions area that is emerging into the social financing one. In social financing, we talk about strengthening the community with the help of financial threads. The threads are so woven that all less privileged or no privileged are come into what I can say the financial net. All right. It also talks about financial inclusion. In fact, the government is worried. The government is equally concerned about having spread financial inclusion. All right. Now, if you happen to operate remote locations and you come across then there is no banking or financial service available, well, you can turn out to be what I can say the banking correspondent. All right. In the remote area where we cannot have the formal banking system, we have the small time shopkeeper working for some of the given banks. On behalf of the bank, they sub deposit, they repay you money, and this is what we can say banking at your doorstep. However, yes, because of technology, you don't need anything, but then all part of the country are not connected on this, what I can say through net one, this one. All right. So these are few dimensions. You can turn out to be a good mutual fund portfolio manager, fund manager, for example. And if I say there are some fund managers who are managing funds more than 10,000 crore, I'm sure it should be interesting for you to understand, for you to do this thing, because after all, money makes everything possible. Money makes me good, the old saying say. So enter the world of finance, ensure your career, ensure your growth, right? Fortunately, unfortunately, this is the financial wealth which is going to determine your success in the life. May not be so desirable, but this is the fact, and the fact is the truth, and truth cannot be denied. One.